All right, everyone, welcome to another episode of Line Your Own Pockets. We got an interesting one today. As always, these are some of my favorite episodes when something comes up on the fly. We're talking to a listener, a client of ours, something. And this was one this week in our Slack that Dave was like, I already know what we're going to talk about. I think this is going to be great. I'm excited for this topic. And it just kind of came up this week. So on the fly episode, absolutely love it. Dave, why don't you tell us what your client was talking to you about?
Yeah, so one of the traders that I've been coaching for some time, I had an issue this week and I talked it through with him. And I was like, man, this is such a good thing that happened that I know a lot of people can learn from it. So I asked him, is it okay if I share it on the podcast? He's like, totally.
Hmm.
So his name's Fineth. Um, I've been coaching him for some time. But I I love Fineth because he is so driven to succeed at trading
Good.
that it's just so much fun for me. I always have to think of, a couple steps ahead, like where he's gonna be in a month or so to kind of plan ahead because he's just I love working with people like that um, you know, maybe they're not trading for a living, or maybe they are,
Hmm.
but whatever the reason, they have to trade and they have to trade well. So they're obsessed with it. And
Good.
it's really fun working with people like that.
Oh, that's my favorite too, right? The worst is the hand it to me, make me a bunch of money, and the best is the right, I've got this drive, I want to learn, I want to, asking questions all the time, right? Very, very excited to get going because those people are going to be around for a while for sure.
Yeah, and they have an expectation about how difficult it's going to be,
Hmm.
so they have reasonable expectations, and they're ready to dive in, and they're going to be successful no matter what. Um, so here's the situation that came up with him. So he's gone through my entire process where he knows how to do the optimizations, he knows how to come up with strategies quickly. He can go from an idea to a back test to optimizing it really fast now. So,
Good.
probably a couple months ago, he had one strategy. Now he's got three. And the other day, he came up with another one. So, over the weekend, a fourth strategy he's got. Um, so, things are going great for him. He's making money. He's super excited, right? Um, so, he's got this other strategy. He works on it over the weekend. He gets it live. This was just this past Monday. Um, Monday morning comes, this is the first time this new strategy is in place, in addition to his other 3 strategies.
And that's almost like Christmas, isn't it? Sometimes when you're about to launch a new, you they just had this brilliant idea. You sat down, you've done all the work. It's actually because most times you have the idea, you do the work, it doesn't test out, but it's everything's kind of gone through all the thought process, and you're pumped and ready to go at that point.
Yeah. So, here's what happened, shortly after the open for this strategy. For turns out it's a coding bug, but he in this one strategy, it took position sizes 5 times what he had designed it for.
Okay.
So I think this is something that no matter if you're a discretionary trader or an automated trader, you've been in this situation.
Mm-hmm.
For whatever reason, you accidentally have a position size that's way bigger than you planned.
Yeah,
So, Michael, I'm sure you've been in this situation.
absolutely.
What happens? What do you think you did?
Well, I've done it a lot. So I'll first go new trader me, and then I'll go the trader that learned because I actually have a a story about this, and it actually happened at the prop firm. And I think the worst possible thing happened to me in which it worked out really well. And I think that's super dangerous. So for me, it was just punching an extra zero. This was back, I was, using the keyboard to enter an exit, right? Bringing up your level two and all of this. And I punched in an extra zero. So I was looking to buy $1,000 of a stock and I bought $10,000 of the stock and maxed out all my buying power and then just complete deer in the headlights. And by the time I figured out what was happening, and this is again trading very, very fast before the computerization of the market, it did great, right? I punched and the thing went up like 50 cents just right away, and it was amazing. I think that was the worst thing because it just cements that bad habit of A, I was just like, well, I'm not a 1,000 share trader anymore. I'm 10,000 trader, right? And then you start trading like that. And then the other thing is it teaches you the bad habit. Now, I have a rule now after I've done that a couple times and it didn't work out so well, which is, you never trade a mistake. A mistake pops up, you kill it, you move, you just completely wipe it out. And then you try to figure out what happened. Maybe you still like the stock and you want to buy with the original side or something. But I just hit the flatten button now. But that first couple times, right? You just go, let's see what happens. Maybe it'll be great.
Yeah. So that's exactly what he did, right?
Yeah.
And you can understand the mindset, right?
Yeah.
So it's funny because I just had a conversation with him the previous week. He's like, "Dave, I'm ready. I'm ready to trade this. The system is working well. I'm making money. Like, just imagine how much I could make if I bumped up my size a lot now."
Hmm.
And I'm like, "Well, you want to do that slowly. We're going to do a whole episode on
Yeah.
the psychology of that,
Hmm.
but it's important to do it slowly." So I'd already talked him down a bit, and it's so he let it ride, and because he knows he has an edge, right?
Yeah.
You know you have an edge. So it's not the worst mistake in the world, but
It wasn't a gamble. He didn't just
it wasn't a gamble,
gamble.
right?
Right. Yeah.
That's a good way to put it.
Right.
Um, but what happens was, of course, he took a loss on those trades, right?
Hmm.
A perfectly normally sized or, normal losses if the sizes were normal.
Yeah.
Um, so what's so dangerous about this? And you hit the nail right on the head. The most dangerous thing would have been for this to work out and for this to have been profitable for
Hmm.
him.
Yeah.
Totally, absolutely the worst possible thing that can happen, right?
Yeah.
Because it puts you in a position where you're overconfident. Next time it happens, you're like, "Hey, well, I remember what happened last time." For all the reasons you said,
Hmm.
that's a very dangerous situation that you may not understand until you've experienced it, and then you know.
Well, and it's like any time that you do something dumb and ends up working out for yourself. There's just something happens in your brain goes, "Oh, it's fantastic." Like the biggest thing that I can think of is when people start averaging down without a plan into shitty positions, right? They bought a stock at 10, news came out and it drops to like 8 instantly. And they go, "I'll just buy more." Right? And then all of a sudden at the end of the day it's 5 and you've kind of completely wiped out. The problem with that is because most of the time doing that will work, right? A lot of the times you buy the thing at 10, it drops to 8, you buy a little bit more, it comes back up to 9, you scratch a trade, you go, okay. And that's the same kind of thing. It just installs that bad habit a little bit. And then the more you do it, the deeper it will install that bad habit until all of a sudden you think that that's the way to trade. And you're just completely gone from what your original strategy plan, whatever is. So it's almost, I hate to say it because I know he's going to be listening, but it's good that you lost money. I think for the when this happened the first time.
Totally, and he gets that totally,
Yeah.
after we went over it, and so there's a couple different ways to think about this. One is if you know that if you make money in this situation, that's the worst outcome,
Hmm.
there's really no other choice but to flatten these positions and wait until next time. Fix the bug, wait until next time.
Now,
There's really no value in even if these things, turn out very profitable, that's still in the grand scheme of things, it's not gonna be very helpful. Like, you
yeah.
want these to have happened because of the system that you have designed, and
Hmm.
if there's an accident or an error and you make money from it, that's not the way it was designed, and that's not ultimately good, not gonna be very valuable.
Now, and this is just kind of a question to you. So for me, it's what you just said. It's pure liquidations. You hit the flat button. You go, okay. You take a breath. You go, okay. What happened? Now and there's probably going to be some questions, and I just want your take on this. What about reducing that size to what it should be? So you said 5 times
Yes.
bigger. So let's say the math was simple. Let's say it bought 5,000 shares, should have bought it should have bought 1,000. Does it make sense to go, I'm just going to correct the position sizes and move on? Or do you think it's just mentally better just to wipe the deck, kind of come back tomorrow?
Uh, it's so tempting to do exactly what you just said.
Mm,
I'm glad you brought that up because that was my next point. It's so tempting to do that, but oftentimes correcting those positions, oftentimes you will make it worse. Think about the mindset you're in.
mm,
You're really frustrated with yourself. You made this mistake, whether you added a zero, whether you had this coding error, whatever it was, you have made a mistake. So, and you're already like, oh my gosh, this position is moving way more than I've ever seen before.
yep.
That's a whole different mindset. So you're already primed to make an even worse mistake. And I've done, it's
Hmm.
so easy to make this bad position even way worse. So that's why the only real way to improve and the real professional way to respond to the situation, flatten the position,
Yep.
take as many notes as you can about why this happened, um, and think about this after hours to figure out how you can improve your process so that this doesn't happen again.
And I think that's huge because it's the difference between mathematics and psychological, and making sure that you're kind of squaring those two. Because mathematically, you reduce position size and then everything's fine. But you're right. You're already, if you haven't had your coffee that morning, if a bunch of positions come in 5 times bigger than you thought, you're up. So your nervous system is just firing, your adrenaline's through the roof. You're now you're in that mode that we're all trying as systematic traders to avoid, which is right, that animalistic, right? I'm no longer thinking clearly. I'm no longer a intelligent rational human being. I'm just right back to a monkey or a lizard hitting buttons. So that's why my rule has always been that is just get me out, right? Shut it down, take a deep breath, figure out what happened, and then kind of move on the next day after I've had a walk around and right, just resetting that. And I think that's huge for people. And it's probably, what we're going to talk about when we talk about scaling up position sizes. The second that kind of mode flips in your brain, where you can call it on tilt, you can call it whatever you want, but you're just super amped up, then there's no getting through to you. There's no rational kind of thought. So I agree with you that it's just best just to clear it, right? Bring the adrenaline back down, rational minds prevail, and then kind of go from there.
Yeah, and also you're really primed in that situation to uh, really truly understand what the problem is.
Hmm.
So we'll go over it in. So I want to go into detail more of that about that in a second. But I want to mention one more thing about the mindset, even before any of this happened. And it was another good takeaway that I've talked to him about and I've shared with the other traders I coach. Um, when you are very enthusiastic about your trading, you're very excited about it. That should be a red flag.
Hmm.
You should be thinking, okay, what am I missing? What am I not thinking about? Why am I this enthusiastic? You're just primed to make mistakes when you're that enthusiastic, and you're also primed to uh, be disappointed when things don't work out up to
Yeah.
your expectations. So when you have this, when you see that awesome equity curve, you think there's so much room there. Even if you make some mistakes, you're still going to make money just because of the equity curve. I mean, there's lots of things that go through your mind. It's still good to take a step back and figure out, okay, can I ease it? Can I put my toe in the water here? I don't need to be the elephant jumping in the pool here.
Well,
Uh,
and yeah, I think a lot of people control for that negative emotion, and a lot of people focus on that and they say, oh, I don't get too down. What do I do when I'm in a drawdown? What do I do when things aren't going my way? And kind of like you touched on, I think the opposite is as important, if not more important, where it is What do I do when everything's going great, right? What do I do when I feel amazing? And I think for my kind of trading and for my group of traders, it's even more important. And just we've just been talking about this recently, where the market was just going up every day. We were hitting new all time highs. Everything was fantastic. And just to date the episode a little bit, we had this FOMC meeting. The whole market tanks at 2%, and everybody's already all of a sudden very very upset. And it was the same thing. They were they weren't checking their emotions as things were going, and all of a sudden they thought, right? Oh, I figured it out. I'm a genius. And then you get kind of slapped there. Whereas if the whole time I'm writing in these messages, I'm saying, hey, everything's great right now. It's not going to be like this forever, right? And I think that's just the difference between experiences. You try not to get too high and you try not to get too low, and you try to keep yourself in kind of a middle band of emotions that are more even. And it makes us kind of feel robotic, but you still pat yourself in the back a little bit when things are going well, but right? The other shoe's coming.
Yeah, for sure. So, let me talk about what's happened since then and the ramifications of this. So, I think Tuesday, Wednesday, he had like normal losing days for this system.
Mhm,
So, totally normal. Size was corrected. The whole thing was corrected. But he has a couple days that were down. So he's still well above. I mean, he's still making money, right?
mhm.
But he's got this dip in his equity curve,
Those always suck, yeah.
and it seems like these days kind of come in batches, right? Where just the timing works out in the worst possible way.
Mhm.
And that sort of snowballs the psychology of the situation. So it's it's funny how, yeah, this was a one thing that happened, in probably a 5-minute period that has these ramifications uh, for the later days because of it. So, and that stuff will sit in your memory. You'll stew over it. So
Yeah.
it's good to think about these and come up with a plan for handling them.
And that equity curve dip, especially the sharp ones, they suck. But I always just try to remind myself, you zoom that equity curve out enough, and hopefully it doesn't look like a dip, right? So load up the S&P 500 on a log kind of chart, and then you look at all the crashes way back in like 1987 that looked like the end of the world, and they're just little blips. And it's the same thing that you're hoping for your equity curve, that you're going to zoom out a couple years from now, and then hopefully you won't even see that little blip. But yeah, in the moment, it just absolutely sucks. And those are the moments I think that separate bad traders from good traders. I think those exact moments of the people who go, I have to get it back, right? And they do something even more dumb, or size up or something to get that position back. And then there's the people who go, I just got to continue. I got to fix the bug. I got to follow my plan, and just understand it's going to take some time to get that equity curve to new highs. But again, hopefully you zoom out a couple years and you're not even seeing the dip anymore.
For sure. Yep. So let's go into some details now about exactly what the bug was,
Sure.
because I think that's pretty interesting too, certainly for the developers and the listener base here. Uh, so he has a setup where he trades with Broker. So if you know anything about Broker, it's it's a local database. You feed that through IQ Feed or some of the real time data feed,
Hmm.
and you can write code to process bars, send trades to interactive brokers. He also has trade ideas, which is so there's a really novel way that I use trade ideas and Amber Broker in this situation. Trade ideas is perfect for filtering the entire market down to a small list,
Hmm.
and Amber Broker is great for taking that list and doing whatever you want with it, whatever strategy you want to do with it. Um, and that combination works really well because Amber Broker, if you're trading it with if you're trading a strategy that's real time enough, you're not gonna be able to churn through all the data required every time to be able to trade it with in a real time enough fashion to make sense. So the combination of both of these works really well.
So
Um,
just to tap on that for the audience. So you use something like trade ideas because it has very good filtering qualities. And then you say, okay, instead of 6,000 stocks, these are the 20, 30, 100 or whatever I want you to look at. And then that allows Amna Broker to be able to crunch those numbers much quicker because as opposed to crunching everything, it's only crunching a small list, right?
right.
Perfect.
So, and with trade ideas, you can, there's a little bit of tinkering there to get the universe of symbols that you ultimately Amber Broker is going to process.
Hmm.
And I'm talking about Amber Broker here, but a lot of people use Python in the exact same way. So if you were do if whatever software you're using and you're processing it locally, it's going to take a long time to crunch through all those numbers. Certainly, if you're using intraday data. So the combination of trade ideas with Python or Amber Broker is really, really great and makes a very, very efficient workflow. Um, so the problem here in Amber Broker, you can set up explorations for each strategy, and that's how you would set it up to, and ultimately in that code, you would be sending it to Interactive Broker. So he has a full automated system using this.
Okay.
Um, as part of each one of those explorations, each one of those strategies, there are parameters that you can use. And if you design your code thoughtfully, you have parameters in there. So you don't have to, like when you size up or change your position size,
Hmm.
you're not changing the code, you're just changing a parameter.
Yep.
And when you design it that way, it makes it a much cleaner process. It turns out, and I've discovered this several years ago, um, and he just ran into the same issue where if you have your parameters with the same name across strategies, so let's say, position size, you name it position size, those will collide if you're not careful when you have multiple strategies running. So that's what happened. He had one of his original strategies was had position size X that was specified in a parameter. His new strategy, which should be trading, he was just getting it off the ground, it should be trading much smaller. It was using the exact same parameter name. He
Got
didn't
it.
realize those were going to be colliding.
Hmm.
So it's not something that's intuitively obvious from a developer perspective when you're doing this. It's only when you combine the combination of the
Yeah.
two strategies together that you realize they collide. So that's first of all, I hope, and I'm hoping, and I'm guessing that there's some listener out there where there's going to be a light bulb there, and they realize that that's what can happen, and I hope
Or
that they,
yeah, something they're about to do and go, oh,
yeah,
I
yeah,
I should just change the name of this one or something. Yeah. Oh, hopefully you save someone there. That'd be great.
right. So the solution that I came up with is for each strategy, just put a prefix. So maybe your
Mm.
strategy, strategy A would be,
Yeah, A underscore
STRA,
that
right?
parameter. Yeah.
And then you don't have to worry about it. They're all distinct, and they won't collide at that point. Um, so
But the
that's
But the funny thing about that is that instantly in my brain, I'm like, that's it's not going to be the only time. And that's why it's good we're having this conversation because that's something that you could probably have given to a very experienced trader who does this and could have just overlooked that. Like it just seems like a very benign, not something that people would think about, not something that a new person would ever come across. And then even something an experienced person could just if they're going through the code go over. So I think that's why it's so important that we talked about what to do when, because right, that situation, those kind of bugs just seem like they could come up all the time for any number of reasons.
yeah, and even if you have a really tight testing process for each strategy,
Hmm.
uh, you would still run into this if you weren't testing with all the strategies together. So it's a really kind of nasty bug that can crop up that could cause some problems.
Now, is that a process that you would suggest traders add to their, every time I add a new strategy, I take the bulk of strategies and paper trade them for a day or something like that? Or do you just think just being there and able to hit the button to override it is enough in that case?
I think it's important to paper trade a strategy even for just a day,
Yeah.
just to see how it interacts. But the important thing to think about is here is, um, and I, Fineth and I have talked about what happened here. How can you set up your workflow to prevent this in the future?
Mm,
That's really what you're after. And talk with a lot of developers. I've done development for many years, and it's really important to have a very good workflow for your code in a way that um, has tight version control, has a process for going from testing into production,
mhm,
even when it's just you working on this code. The problem is when we're designing strategies that are robust, they're going to work for a long time. The more successful you are at doing that, the more out of the zone you are when there's a problem with the strategy and you have to go back and look and see what the problem is. So, imagine you find a bug in a strategy you've been trading and you haven't modified the code in 6 months, maybe 2 years. It's almost like you're looking at somebody else's code when you go back and look
yeah,
at it.
yeah,
So in the moment, it's really easy to cut corners. It's really easy to imagine that, "Oh, I understand this now, so I'm gonna understand it tomorrow, or I mean, I wrote the code. I
mhm.
wrote every bit of this code. Like, I completely understand it." But I can assure you that in 6 months, it's gonna look like somebody completely different wrote it. And
And
in
I
fact, it should look like that because you should be getting better and better over time at coding.
well, and
So
it's
if
funny.
it's not the case, then it should be.
And I've learned as someone with no coding background at all, I've been coming through the same thing in little things, just talking to the other non-coders out there, like real tests. And I know Amni broke and everything. Just have the ability to write notes and it's just something that again I know you as a coder is like, yeah, of course you write notes for every, and I wasn't doing that, so I would have this big piece of the system, and maybe I was halfway through working on it and I got distracted or I ended up doing something else and I come back to it. I got no idea what any of this stuff is trying to say anymore. And it took me hours to kind of parse through it. Where if I just do what I do now, where you just write little notes for each kind of block of what, this is looking for this is what this does, all that kind of stuff. It really, really speeds that up. And you're right. It's one of those in the moment, it feels like you're taking longer to do a thing. Maybe it would take you 2 hours to do it, but it's gonna take you 3 or 4 because you're heavily documenting things, and, even myself as a visual person, I'm applying charts to the setup, so, I can link to a chart and say, "This is what I'm looking for, and this is where the area is," and all that kinda stuff. So it feels like you're going slower, but you're right. It's one of those in the long run, you'll be like, "Oh, man, I'm glad I did that."
Totally, and it is there's a couple things that for developers that I'm gonna point out here. One thing is to really in the code you write, make sure you're writing standardized code that has good style. There's always for each language, there's a style guide that is, uh you can go and see what coding standards and like a style guide for how you should be writing code. There's lots of different ways you can write code, but it's important to do it kind of in the standard way. That's going to help you in 6 months when you have to go back and look at your code. Um, the other thing is you should have your code in version control, and if you don't, that's a big problem. So you should be using a GitHub repo. You should be committing your code to the repo. You should have a standardized way in your workflow for doing that. Um, you should be not committing your code to the main branch. You should be creating a new branch. You should be uh, uh, committing to that new branch and then doing what's called a pull request to get that code into the main branch. All these things are um, easy, simple to overlook when you're trading one strategy
Mhm.
or when you're just getting started. But as soon as you start adding more strategies, or as soon as you have to go back and look at your old code, or you come up with a bug, you find this bug, and you're like, "Oh, what change did I make when?" You have to have a solid process for tracking changes, doing little releases, and I know this. I know it sounds like busy work for somebody who's, you know, they're a one person shop, they're creating code, they're writing every bit of the code. It's just so important to have that process in place. You will thank me one day because it'll become crystal clear that that foundation you laid is well worth it.
Well, yeah, and I think you hit the nail on the head there with the multiple strategies, right? If all you're doing is one simple strategy and you're that's it, it's your focus, then that makes life a little bit easier, right? Because you're looking at the same thing every day and you're tweaking the same thing. But yeah, as you mentioned, you should generally be running multiple strategies, and then you should always be working on new strategies. So if what you have is working, then your brain is somewhere completely else because you're looking for the next thing. And then you're right, you kind of come back. And I think I'm seeing this even more than most as someone who's a non-coder. If I go back even in real test 6 months and I look at what I wrote, I have no idea. And you kind of laugh at yourself. It's like if I go back on my YouTube channel and I see a video from 10 years ago. I think it's the cringiest thing on the planet, but it's the same
Mhm.
when you're in the rapid growth stage, then you end up everything you do and everything you learn and everything you kind of co-opt from others pushes everything so far ahead that yeah, you're going back and even for me a couple months ago, I'm like, why would I do this like this? This doesn't make any sense or just right. So just having that documented, yeah, I think absolutely makes perfect sense. And
Yeah.
more importantly, I think I liked your idea of just take a day and just paper trade anytime you make a trade or a change, package the whole thing, right? Trade it just in case those events happen because thankfully in this situation it was only 5 times the size, right? Could have been depending on the buying power you have in your account, could have been 10 times the size, could have been 100 times the size, right? If you were to the point where, maybe it executes and it just executes so big. And the same, I know we're talking about stocks, but I've had a lot of the same things when it comes to foreign currencies and metals and different assets like this, where tick sizes are different and all this kind of weird stuff. So you think you're putting something in as one, it comes out 10 times the size and you're taking 10 times the risk. Yeah, so I think it makes absolutely perfect sense to go, okay, just take a day and just track it through, make it work exactly like it's going to in live, and understand that even then, right, there still might be something that comes up in the transition.
Yeah. Yeah, so there's, a couple other things I'll say. One other suggestion, like I alluded to earlier, you should be parameterizing a lot of the variables in your code so that you when you make a small change to your process, for example, increasing your position size,
Hmm.
you shouldn't be modifying your main code to do that. You should be modifying a config file or a parameter. You shouldn't be modifying your main code base to do that. And it's not just position size, there's probably lots of things you can parameterize like that. That's just good style, and um, it's gonna make your workflow a lot better. Um, the second thing is getting code into production is something you need to think about and have a plan for. And, I work with some, traders, who are at prop firms, and they have a very tight process for getting code from test into production. And that's the way it should be. You should have when you do that, you should have a process for looking over it closely,
Hmm.
taking it seriously, trying to understand how you might be missing something. When it gets into production, all of a sudden, your money is at risk.
Yeah.
And there's ways that, especially if you're writing code to make trades, there's ways that you can liquidate your account very quickly if you don't think about this very carefully.
Yeah.
Back the other day, so I'm creating the software that trades through DOS, and there was a bug in my code. I looked down, the trade came through. I looked down, and it had locate. It was in a locate loop, so it was
Okay.
locating.
Short shares. It was trying to find shares short.
It's
Yeah.
trying to find shares to short, which is part of what it's doing. But I just didn't anticipate this could get into a loop like it did. Luckily, I was right there, but I was, all of a sudden had located and taken a 10 times as large a position as I should. Luckily, I was right there, but
And
immediately,
for new traders, right, you have to pay for those. You're basically going to a broker and you're saying, "I'm willing to pay $1 a share for the ability to short this thing," and yeah, those things can get crazy where you could spend a whole lot of money on if it kept going to borrow these shares, and they probably get more and more expensive the more you borrow. So yeah, that's something that could have probably just and it's not even a trade that hopefully could go your way. You're just spending that money.
yeah, and there's lots of when you write code and you got an event-based system, there's lots of loops that you can get into that you don't anticipate. So it's really and I mean, if I wasn't there, it would have just continued and it would just liquidated the account. I mean, there's just no two ways about it. So
Wow.
it's super important to have a tight process around these things because those things can happen. And I know traders that have uh, lost a lot of money because of bugs like that. And it's just you. Good advice is just be. Somebody gave this advice to me a few years ago. Just be paranoid.
Hmm.
Be paranoid when you're writing code. Try to anticipate what could happen that you might not be thinking about, and that you get better at that with experience, but super important when you're talking about making trades.
Well, and I think a good final thought too is, we've a couple times already you stress the importance of being there, right? When at least until you're absolutely certain that the things run for months and you think every possible scenario is out of the way, but it's very very important. Which again, a lot of people think systematic trading. I just dump the code and I go to the beach and have a drink, but yeah, until you are just very confident that that thing is going to run and you have all these fail safes in place in case something happens, yeah, just make sure you are there, right? And just watching and it's not like it's really hard work because you're just watching a system go, but for those little scenarios, especially when you're in the building phase, just being there watching could save you so much money.
100%. You're totally right.
All right. Well, I think this was a great one. Because you're right. Everybody, doesn't matter if you're a discretionary trader, it doesn't matter if you're an investor, it doesn't matter if you're a day trader. Everyone's done this, right? So, I think this was a fantastic one. As always, we love the feedback and let us know. Tell us your war stories. I think that'd be great in the comments. We'll read through them because it's one of those. If you haven't done it, you're either lying to yourself or you haven't been trading long enough. I think is probably the way to do it, right?
Yeah, so, again, thanks to Finance for allowing this, lesson to be, transmitted to the listeners. I'm sure that some listeners learned a thing or 2 from his mistake. I
Yeah.
sent I sent Fineth a Line Your Own Pockets T-shirt,
Oh,
so
sweet.
just appreciate, for him doing this, so
Cool.
yeah, it's great to we got a whole bunch of topics coming up
Mhm.
that I'm really excited about, but as always, feel free to email us with topics that you want us to touch on. We hear uh, from listeners with topics before, and those are really good. So any
Yeah,
feedback you have would be great.
quite often, sometimes you guys are better in coming up with topics than we are, and I love it because, especially on the fly. Before I hit record, I really didn't know what we were gonna talk about, but I think this was a great time. I think it was a good lesson for everybody, and I am Michael Noss.
And I'm Dave Mabe. We'll see you next week on Line Your Own Pockets.